Before we go to the price targets of the specific companies, let me just give a few details on what we can expect for these Indian ports and what's their trajectory going forward. Now, Jefferies believes that all India port cargo is expected to see about a 6% of a CAGR growth between FY24 to 23 period. Now, this in contrast to what has been happening in the last couple of 10 years, this is slightly higher growth that we are looking at, 5% growth that we have seen in the last 10 years itself. Even this is on the back of the private sector ports which are making strong expansion, which includes the names like Adani Port, JSW Infra, and even Dubai Port expanding their operations coming over here. But now what the brokerage has seen, what have they given as a price target? So Adani Ports continues to remain as a favorable one here with 1,910 of a target price, 28% upside that we are looking at. They have now initiated a buy call on JSW Infra with a price target of 375, implying about 21% upside from current levels. But on the Gujarat Pipavav, they continue to maintain an underperform rating, seeing about a 39.6% of a downside. But going forward, now let's break down company-wise on how these three companies are expected to see their growth going forward. So I'll start off with JSW Infrastructure first. 20% of an EBITDA CAGR growth that is being visible at current juncture. So this implies, this is excluding the potential inorganic opportunities which takes place, and this is on the back of some strong capacity additions that they're making. 2.4x of a capacity addition that we are looking at, implying about 400 million tons of capacity compared to about 170 million tons that they hold. This is by FY30 that the target is. Other than that also, as mentioned, EBITDA growth remains on a strong trajectory. Only downside risk over here can be the delay in the group capex plans, which can lead to this capacity addition plans to get deferred. Now coming to Adani Ports here, Adani Ports has remained as a market leader. It has a dominant share here, with about 27% of a market share as we speak. So strong growth already there for Adani Ports. They've maintained their double-digit guidance also going forward. EBITDA growth of about 15%. This is on back of the volumes and operating leverage that has been kicking off for a couple of years now. So that was on Adani Ports. Now coming to Gujarat Pipavav Port, here instead of seeing the kind of performance that they have posted, because of how the question here comes on the market share, given that Adani Group has a strong foothold in the Mundra port, so market share expansion remains as a question mark. Even the current target which the company has given, which Jefferies has given, does not factor in extension of their existing concession. So that also remains on a watch out for on what the future trajectory of the company holds. So this was the overall outline on all these three companies. But let's look at the market opportunities going forward for the port companies. So if you look at the current capacity, about 1.5 billion ton of cargo is the current capacity. This is along the 7,000 kilometer of coastline that we are looking at. Government is planning to take this to up to 1.8 to 2.5 billion ton cargo by FY30, in which Jefferies sees this number coming up to about 2.2 to 2.4 as we speak. And now in this also, this will be driven by a couple of products over here, petroleum products, coal, including coast shipping key, other bulk drivers which will lead to this growth, and the extended capacity, additional capacity that we are seeing, 80% of this is being driven by the private ports as we speak. So again, focus remains on Adani Ports, JSW Infra, Gujarat Pipavav. But now let's look at the revenue growth that the companies have posted and what it is projected to grow forward. So if you look at JSW Infra, a standout over here, JSW, Adani Ports both with about 23.6% and 34.7% respectively between 20 to 24, while in 24 to 30, Jefferies expects a 15.1% of a growth for Adani Ports. This is in terms of revenue, while for JSW Infra, they see about a 20.5% growth. This in comparison with Gujarat Pipavav. Gujarat Pipavav is a laggard in terms of revenue CAGR over here, 7.7% in 20 to 24, while over 24 to 30, it's estimated that they'll grow at a rate of 17.4%. Coming to volumes, Adani Ports is a clear standout, 420 million tons that they're currently handling. This is 1/4 of which is currently being handled by JSW Infra, which is about at 107 million ton, and Gujarat Pipavav currently handling about 16 million ton. So this was on the financial performance and the volumes. Last leg, let's talk about the valuations. JSW Infra, higher valuations as we speak compared to the other two, 53.3x of a PE multiple that we are looking at for FY24, which is expected to go down to 46x and 44.7x. While if we compare that to Adani ports, that is at about 36.2x, which is expected to go down to 24.8x by FY26, and Gujarat Pipavav 28.2x of a PE multiple, which is expected to come down at 19.7x. So this is the valuations, the financial performance, what's happening in the Indian ports, the capacity additions that we are looking at, and why Jefferies is in favor of JSW infrastructure, and why the stock is buzzing on the back of the initiating buy coverage that we are looking at, 6 to 7% up in trade today.